Guys, now we get to a very, very important part of this chapter, and that is all about discounts. We are going to take discounts a little bit further than what we've done up till now. Now, after this particular part of the study unit, you should be able to apply the accounting treatment of different discounts. So you should be able to identify what discount are we talking of when we give you some information. And then you should determine how you should, out of an accounting perspective, treat that discount in the books. So that is extremely important. Now, there was some changes made to IAS 18 and IAS 2 where they prescribe to us now how certain discounts should be dealt with in the accounting records. Now, the first thing that you should know is what is a trade discount, a rebate, and a cash discount. Now, what is important is that you know with trade discounts, it is a negotiated price. So with a trade discount and a negotiated price, my invoice will be issued after that trade discount has already been deducted from the invoice. So the invoice amount will always be an amount after the trade discount has been subtracted. A settlement discount is an incentive that an entity gives to its debtors in order to settle their outstanding debt in a short period of time. So he gives them an incentive and says, if you're going to settle this debt within 15 days, you don't need to pay 100% of the invoice amount. You can only pay 95% of the invoice amount if there is a 5% settlement discount that comes into play. So settlement discount is to encourage the debtors to pay their outstanding debt quicker. Now, this sounds very much like South Africa. Big discounts means small profit. Now, to increase the profit, find a big customer and rob him. Sounds like the receiver of revenue to me. Okay, trade discount and cash discounts. Now, although these discounts could be shown on an invoice, what is important that you know that these kind of invoices are issued after these discounts have already been deducted. So the total that appears, the final invoice amount that appears, is after the trade discount has been deducted. So if the normal selling price is R8 for a can of soft drink of 200 ml, and the normal cost price or selling price of that item is 1,600 Rand, you have negotiated a 25% discount, trade discount. It means that your invoice price, the invoice that you are going to receive, will only be for a total amount of 1,200 Rand. What do I use as a source document to update my debtors and creditors journals? The invoice value that was issued. So if I'm talking about debtors and I have given the debtor a trade discount, the trade discount would already have been deducted from the invoice amount. So when I'm going to post the invoice in my debtors journal, that invoice amount will already have taken care of the trade discount. If I tell you in a question that the normal selling price or the normal invoice price is X, but that he has negotiated this, argument's sake, a 10% trade discount, then you know that you have to deduct the trade discount still, because normal means that is the normal price that I usually sell that merchandise for. So if he has negotiated a special price, it means that that normal invoice price has not yet been adjusted. So please read your questions very carefully. Okay, now what is a settlement discount? A settlement discount, we said, is to encourage our customers to settle their accounts as soon as possible. Now, on the invoice, you will see that the credit terms will appear, and the format of that credit terms is exactly this. So you must know what this means. 1/20 N/30. Now that means this guy is entitled on a 1% settlement discount if he settles that invoice within 20 days after the invoice date. He has in total 30 days to settle that invoice. So in total, he has 30 days to settle the invoice, but if he settles it within 20 days, he is allowed to deduct 1% of the amount that he's going to pay. Now, IAS 18 requires us to, when we expect that a customer will utilize the settlement discount, we have to record the settlement discount at the start of the transaction. So at the date that the sales transaction takes place, we already have to account for the settlement discount as if he has already utilized that settlement discount. Now, how are we going to do that? That means in a normal transaction, how do we record that transaction? We would say, let's say debit, the invoice amount is 10,000 Rand. We would have said debit, debtors 10,000, credit sales 10,000. Now, if they want us to record the settlement discount up front, and let's say if this guy is going to settle his account within 10 days, he can get a 5% settlement discount. Then, when the sales transaction takes place, we're still going to debit debtors with the invoice amount, i.e. 10,000 Rand. But we're not going to take the full 10,000 Rand to sales because we actually expect this guy to make use of the settlement discount, which is going to be equal to 500 Rand. So then we are only going to take 9,500 Rand to our sales revenue account. And the other 500 Rand we are going to take to an allowance for settlement discount account. Now, debtors is statement of financial position. Sales is the income statement, the income account, statement of profit or loss. And then this allowance for settlement discount is also a statement of financial position account. If there is any settlement for or allowance for settlement discount account balances left at the end of the month or the end of the financial year, you are going to disclose that in the note of trade and other debtors. You're going to start with your gross debtors, less allowance for credit losses, less allowance for settlement discount, net trade debtors, and then you're going to add the accrued income and the prepaid expenses, whatever, to give you a total of trade and other receivables. So that means that this allowance for settlement discount is also a statement of financial position account. Why do we deduct it from our debtors figure in the statement of financial position? Guys, because what is debtors? Debtors, that amount for debtors that we show in our statement of financial position, should be equal to the amount that we expect to receive from our debtors whenever they're going to make payment. Now, if the outstanding balance is 10,000 Rand on our debtors account, but we only expect to receive 9,500 Rand because we expect him to make use of the settlement discount, we can't show in our statement of financial position debtors 10,000 Rand. We can only show then 9,500 Rand. And that is the reason why we have to deduct the allowance for settlement discount balance from our debtors account balance at the end of the year to derive at a final net trade debtors balance, which will be shown on the face of the statement of financial position. Please note that the separate discount allowed account is not used, and if you're going to use it, I promise you minus 5% straight away. So let's do an example. DF Stores sells goods for 40,000 Rand on credit. DF Stores normally allows 2% settlement discount if debtors settle their account within 20 days. DF Stores expects that this debtor will pay within 20 days, and let's ignore that. So, what is the invoice amount? That is the first thing that you have to find out. The invoice amount equals 40,000 Rand. What goes to my debtors account? The invoice amount. Debit debtors 40,000 Rand. Do I expect to receive 40,000 Rand on the sales transaction? Now, I only expect to receive 98% of the invoice amount eventually. So I can only take 98% of the invoice amount to sales. The other 2% I'm going to take to an allowance for settlement discount account. So debtors is going to be debited with a full invoice value of 40,000 Rand. Sales is going to be credited with 98% of the invoice value, 39,200. The other 2% of 40,000, i.e. 800 Rand, is going to be taken to an allowance for settlement discount account, 800 Rand. And can you see that I'm in balance now? If I had to compile a set of financial statements now, at what value would I have shown my debtors in the statement of financial position? I would have shown in my note 40,000 gross debtors, less allowance for settlement discount 800 Rand equals 39,200, and on the face of the statement of financial position, trade and other receivables only then the 39,200. So this is for faithful representation, guys. I only expect to receive so much from the debtors, therefore I can only show that much for debtors on the face. Now, let's take scenario 1. Let's assume that EF Stores pays within the 20 days. So this was our first transaction. We expected him that he was going to make use of the discount. Now he actually pays and he does make use of the discount. So he's not going to pay us the 40,000. He is going to pay us 40,000 times 98%. So bank is going to be 40,000 times 98%, which equals 39,200. Now we have to get rid of our allowance account because when one settlement takes place, this account is redundant. It has no right for existence and we should remove it out of our set of accounts. So we have to debit that 800 Rand against the allowance for settlement discount. What was the outstanding debtors amount? 40,000 Rand. So we're going to credit debtors with 40,000 Rand. So debtors is out of our books. Bank reflects the correct amount. The allowance for settlement discount is out of our books. And initially, when we actually recorded the sales transaction, our sales was recorded already at the correct amount, which only equates to 98% of the invoice amount. So can you see here, when the initial sales transaction took place, we've already rectified our sales to 98%. In order to do so, we had to create this allowance for settlement discount account of 2%. And when this guy is paying us, he actually pays us only of the invoice value 98%, which is also 39,200. I'm not going to fiddle around with my sales again because that is right. I have to take this 800 Rand out of my books. There I took it out. And I have to record the correct amount that I've received in my bank account. What would have happened if DF Stores pays only after 21 days? Now remember, the outstanding invoice amount was 40,000 Rand. If he didn't pay within 20 days, he is not allowed to utilize any settlement discount. So he has to pay me the full invoice amount. 40,000 Rand debit in the bank, credit debtors 40,000 Rand. But now remember, with the initial transaction that we have recorded, we have created this allowance for settlement discount account. Yeah, we have created that allowance for settlement discount account of 800 Rand. So we have to remove that out of our books because that is no longer a valid entry. This thing has been settled. I need no allowance. There's nothing to write it off against. So I have to debit that account. And where am I going to take that? Guys, I'm going to take it to my sales account because remember, what did I do? Here I have recorded only 98% of the sales amount in my sales revenue account because that was the amount that I was expecting to receive. But in actual fact, I now received a full 40,000 Rand and there's only 39,200 Rand in my sales account. So I have to bump it up to the correct amount of 40,000 Rand. So I'm going to debit this account now with 800 Rand and credit my sales revenue account with 800 Rand so that my sales is also going to be reflected at 40,000 Rand. So debit my allowance for settlement discount account and credit my sales account with 800 Rand. Now, VAT. Usually the wheel starts to rattle once we introduce VAT. How does VAT work? Guys, VAT works basically exactly the same than what it did in the past. The receiver of revenue says, I'm not interested in your expectations. He says, I'm interested when a transaction really takes place. He says, and the first transaction that really took place was the sales transaction. Therefore, the VAT output on the sales transaction, according to the VAT invoice, should be paid over to me. He says, and according to me, the next real transaction that takes place is when settlement takes place. And there I have to see whether this guy stands in line for settlement discount or not. If he does qualify for settlement discount, you can claim the VAT on the settlement discount amount that he has utilized. And that would be then a VAT input. So VAT output is still calculated on the full invoice amount when the sales transaction takes place. When the settlement of that outstanding bill takes place, then I must determine whether he was entitled on a settlement discount, and if he was, I can claim VAT input on that amount. So guys, if you know the steps that you have to follow in these kind of transactions, you will not have a problem. The steps are as follows. Number 1, determine the invoice price. And the invoice price will always be a VAT inclusive amount. So determine the invoice price. Before I can start working in accounting with anything, I have to remove the VAT. So calculate the VAT and remove the VAT from the invoice price. So what do I get then? Then I get the VAT exclusive invoice price. The invoice price less the VAT gives me the VAT exclusive price. Then I'm going to break that VAT exclusive price down into 2 legs. The one leg is going to be the expected discount. So that is the percentage multiplied by the VAT exclusive amount. The remaining amount is going to go to sales. So if the percentage here was 2%, 98% of the VAT exclusive amount will go to the sales account. So let's do that. Number 1, what am I going to take to debtors? The invoice amount. What is step number 2? Determine the VAT on the invoice and post that VAT to the VAT output account. So credit VAT output. Number 3, what am I going to do? Take the VAT exclusive price there and breaks it down into the 2 legs. The settlement discount percentage that you expect to grant, that will go to your allowance for settlement discount account. The percentage less the percentage settlement discount, let's say it's a 2% settlement discount, the 98% remaining of the VAT exclusive amount that you're going to post to your sales revenue account. Now, settlement takes place. So you're going to determine what is the settlement amount. What is the settlement amount? That would be, let's say it's a 2% settlement discount that he is entitled on. So that would be 98%, 100% less the discount percentage of the outstanding invoice value. 1 equals the invoice value. That is the amount that we're going to receive from the debtor. The difference between the amount that we have received from the debtor and the outstanding debtor's amount, that difference equals the settlement discount inclusive of VAT. So if you strip out the VAT, you are back at your VAT exclusive settlement discount amount, and that should equal your allowance for settlement discount that you've created initially. So you have to get that out of the books. Then on the VAT exclusive settlement discount amount, you're going to multiply that by 15% and you can claim the input VAT on the discount that you have allowed. So debit bank, what is that? That is the 100% less the discount percentage. If he settles in time to make use of the settlement discount, multiplied by the invoice value. That is 7. The allowance for settlement discount and the VAT input, let's just park that. Debtors I'm going to clean out with the invoice amount. The difference between the invoice amount and the amount that I've received equals settlement discount inclusive of VAT. So I strip out the VAT and I claim the VAT as VAT input. And the VAT exclusive amount, I'm going to clear my allowance for settlement discount. Let's do another example. Alpha Trader sells goods on credit to Bravo stores amounting to 1,150 Rand invoice price. If Bravo pays within 20 days, 5% settlement discount is granted. Alpha Traders is a VAT vendor. So let's record the sales transaction first. Step number 1, determine the invoice price, 1150. Step number 2, take out the VAT. 1150 divided by 1.15 times 15% gives me 150 Rand. Number 3, determine the VAT exclusive price. 1150 minus 150 equals 1000. Break down the VAT exclusive invoice price into the two legs. 5% will go to the allowance for settlement discount account. 95% will go to the sales account. So here is our VAT exclusive amount. There's our VAT. So debit debtors with the invoice amount of 1150. Credit VAT output with the VAT on the invoice. Invoice 1150 divided by 15,000 times 15% equals 150. Determine the VAT exclusive amount. 1150 less 150 equals 1000. 95% will go to sales. And 5%, 95% of 1000 will go to sales. 5% of 1000 will go to my allowance for settlement discount. 150 plus 50 plus 950 balances back to 1150. Now, let's assume that settlement takes place and this guy settles within the settlement period. So it's not going to pay 1150, it's only going to pay 95% of 1150. So it's only going to give us 1093. So what am I going to receive in my bank account? 1093. What am I going to clear out of my debtors account? Do that first. Out of my debtors account, I want to clear the full invoice outstanding amount of 1150. What is the difference between the 1150 and the 1093? The settlement discount that we utilized. That one, 1150, that includes VAT. Bank includes VAT. So the difference between the two, 1150 less 1093 equals 57, is the VAT inclusive amount. Strip out the VAT. So 57 divided by 1.15 equals 50, and that will be debited against my allowance for settlement discount account. 50 times 15% equals 7, and that is the VAT input that I can claim. If you go back to the original transaction, allowance for settlement discount that I have originally accounted for, just hold on. There it is. Initially, I've credited my allowance for settlement discount with 50 Rand. What have I done now? Now I've debited my allowance for settlement discount with 50 Rand. So this is out of our books. Our bank is recorded at the right amount that we actually received. Our debtors control is clean. I have claimed the VAT that I'm entitled on when settlement took place. J. Smith sold on 3 May 27 merchandise to Bebok to the value of 127.78. That is the normal sales value, VAT inclusive. A trade discount of 10% is granted. The credit terms are 5, 15 and N30. So if he is going to pay within 15 days, he's entitled on a 5% settlement discount. In total, he has 30 days to settle this outstanding invoice. Bok paid his account within 12 days. So obviously, he was entitled to utilize the settlement discount. And let's assume that we also expected him to make use of the settlement discount. So the first thing that I have to determine is what was the invoice amount. The invoice amount, this is the normal invoice value. So what was the amount that he received it at? 90% after the reduction of the trade discount of 10% of 127.78. Invoice amount, 127.78 times 90% equals 115. Step number 2, take out the VAT. 115 divided by 1115 give me the VAT exclusive amount of 100. 100 times 15% equals 15. Good. Now, I take the VAT exclusive amount, which is 100, and I break it down into the two legs. 5% of the 100, i.e. 5 Rand, will go to the allowance for settlement discount account. 95% of the VAT exclusive amount will go to my sales account. So let's just post this. Sorry guys. Debtors control would have been debited with 115 Rand. Let me just do this for you. So that one is my debtors control account. Control account would have been debited with the amount of the invoice, 115 Rand. There you see that. Okay. Then sales would have been credited with what? With a VAT exclusive amount multiplied by 95%. Just put that one there. So there's our credit entry, 95 Rand. My allowance for settlement discount. My allowance for settlement discount account would have been credited with 5% of the VAT exclusive amount, 5 Rand. And VAT output would have been credited with the full amount of the VAT that appears on the invoice equals 15 Rand. Yeah. So debtors would be debited with the invoice value of 115 Rand. Sales would be credited with 95% of the VAT exclusive amount. Allowance for settlement discount would have been credited with 5% of the VAT exclusive amount, and the VAT that appeared on the invoice, i.e. 115 divided by 1.15 times 15%, 15 Rand, would be credited against VAT. This guy pays now in time to make use of the settlement discount. So what's happening? I'm going to receive now 95% of the invoice amount. So 115 times 95% equals 109 Rand. Let me just put that. So I'm going to clear out my debtors control account now. My debtors control account is going to be credited with that amount of the invoice, which equals then 115 Rand. Good. What is the difference between those two? The difference between those two is the settlement discount, but the settlement discount inclusive of VAT. So I want to clear out that account because it is no longer a valid account. So if I want to clear out that account, I have to debit that account with an amount of 5 Rand. Good. And then I'm going to debit VAT input with the VAT on the 5 Rand, 15% of 5 equals 1. So that is going to be debited against the VAT input account 1. So if I'm going to take the 109 plus the 5 plus the 1, I'm actually back at 115 Rand. There. Just put it last. Right, so there it is. 109 plus 6 is 115, so this whole thing balances out. Let's take another example. On 10 and 11 May, sales of 8,800 to Pillay and 2,200 to Jones were done respectively. That is included in the above amounts, and it's estimated that both customers will settle their accounts in time to receive a 5% settlement discount. So let's do the sales transactions first. Let's take Pillay. Pillay 8,800 Rand, it's VAT inclusive. We expect them to receive a 5% settlement discount. So number 1 is determine the invoice price, 8,800, and we take it to debtors control, 8,800. Take out the VAT. So 7,652 is the VAT exclusive price. That times 15% gives me the VAT which was included in the invoice, so 8,800 less 7,652. That will go to VAT output. There it is, 1,148. Take the VAT exclusive amount and break it down into the two legs. 5% of the VAT exclusive amount, i.e. 383, will go to my allowance for settlement discount, 383. 95% of the VAT exclusive amount of 7,652 will be credited against my sales account, 7,269. Great, now let's see when did settlement take place. Payment of the account is received from Pillay at 10 June and settlement discount is granted to him. So obviously he pays in time to make use of the settlement discount. How much is he going to pay? 8,800 times 95%. So the amount we're going to receive in our bank account equals 8,360. What do we have to take out of his account? We have to take out of his account the full invoice value of 8,800. What is the difference between the two? The settlement discount utilized by him inclusive of VAT. So if I take the difference between the two of it and I divide it by 1.15, I will get the VAT exclusive amount, and I'm going to debit the allowance for settlement discount account with that 383. And that is that 383 that I take out of my books now. So I eliminate that one, I take it out. That allowance is no longer a valid account. I have to remove it. And now I can claim 15% on the 383 as VAT input. So 383 times 15% equals the VAT input of 57 Rand. Just put it here. Debit of 57 Rand. There. Okay. Let's take the second guy. 2,200 was done to Jones. So again, determine the invoice price, 2,200. Take out the VAT, 1,913. Take the VAT exclusive amount and break it down into the two legs. 95% to sales, 5% to the allowance for settlement discount. Debtors control will be debited with the invoice value of 2,200. The VAT appearing on the VAT invoice must be paid over as VAT output to the receiver of revenue. 2,200 less 1,913. That will be posted to my VAT output account, 287. Good. The difference between the VAT exclusive and inclusive amount, so 2,200 less 287 equals 1,913. That I'm going to break down in 5% and 95%. 95% will be posted to my sales statement of profit or loss. 5% of the VAT exclusive amount of 1,913, i.e. 96, will go to my allowance for settlement discount account, a statement of financial position account. Now, Jones only settled his account on 30 July and no settlement discount is given. So, although we have expected that he will make use of a settlement discount, he pays too late to make use of it. So what is the amount that he has to pay now? Now he has to pay me the full 2,200 Rand. So debit bank 2,200, credit our debtors control account 2,200. But in our books, we sit with this allowance account which is no longer valid. And we sit with a sales account which was only equal to 95% of the VAT exclusive amount. If we paid 100% of the VAT exclusive amount, then our sales should have been 100% of the VAT exclusive account. So clearly our sales account is understated with 96 Rand. So when we're going to take out this 96 Rand, we have to debit this allowance account with 96 Rand. We're going to put the counter leg to sales. So we're going to credit sales with 96 Rand. Sales will now be equal to 1,817 plus 96, which will bring you back to the VAT exclusive sales of 1,913, what it should have been if there was no discounts available. Guys, this is very important stuff. Please go back to it again. Please make sure that you understand it, because you will be examined on this for the rest of the year.